of Greece and Greece news almost every given day of the last week. And obviously when you have this much uncertainty and unknown in the market, market participants are very nervous and price action becomes extremely chop chop and whip whip and very difficult to trade. In the big picture, it is extremely clear and no doubt that market gave us the first warning sign here with a very large gap down in this session here, and several sessions has passed and we have been unable to close that gap still. When we did break down, I warned you that a retest of this trend line was very much likely, and after we were gonna come and retest this trend line, then possibility of a second leg down that would initiate from this retest is very much so into play, and this analysis still valid as of right now. As long as we do not reject on a closing basis into the trend line, this market is wide open for another big push down. Now, how much of a downside we could expect? Well, we should expect roughly the same length I can delete this. We should expect the same length that we saw from a drop from 2120 to 2150. That's a 70 points drop. Therefore, we deduct 2080, this top, minus 70 point. We should land right around 2010. 2010 is the first downside objective. Sometimes this what you call wave 3, because the first one was wave 1, the second retests wave 2. Now we could be in the process of starting a wave 3. Wave 3 can even be much wider in terms of range than this first wave. So 2010 is the minimum target. Of course, you don't need to be Einstein to look at this chart and know that there has been so much abuse and orgy and so badly detached from the fundamentals that if the market wants to get a little bit of a catching up to do with reason and fundamentals, I mean, we could drop hundreds and hundreds of points. But you must be reminded that during any given first warning sign, because market has had a habit of saving the buyers will see this as a buying opportunity, and we could possibly see a rally that could trigger for a retest of the high again. But after the rally is done and they don't bring in enough buyers into the market, then the next leg down is the destructive one. Let's all keep this in mind, that this Greek business is extremely critical. We are not talking about a Bozo Bear Stearns or a Bozo Lehman Brothers gambling casino going out of the business. We are talking a nation going out of business. We are talking millions upon millions civilians possibly seeing their money situation being affected by it. We are going to have rippling effect of this over other countries. We're gonna see effect of this over investment bankers, over investors that had exposures towards Greek bonds, investments, etc., etc. This is not a joke. Do not take this lightly. To me, this is a clear-cut warning sign that it is time to get the hell out of this casino. Now, maybe I'm wrong, maybe I'm right. Time will tell, but I learned one thing in my short period on this earth, is that anything good has a window of opportunity. You capture the window of opportunity right, you become wealthy. anything that you overstay that is too good and you do not look at the warning signs, you not only lose all your profit, but your capital will be gone as well. And this is a clear cut first warning signal. This market has been more than euphoric. This market has been more than abusive to the upside, and I believe now it is time that there will be serious catch up and correction coming into the play. Obviously, the main level that we are going to be concerned with is 2050, or we can create a zone between 2050 to this low of 2047 or whatever it is. That is, of course, now the line in the sand. In order for anything destructive to happen, we need to break below this. To the upside, in order to go for a retest of the high and possibly close the gap and hit 2100, we will have to clear 2078 to 2081. Therefore, now we are in a bracketed market. You sell as close as possible to that 78 level and you buy as possible close to 2050 level until one of these two sides decides to break. Now let's take a look at the chart of CL. For a very, very long period of time, they were just taking this thing up and up and up and up and up and up, and everybody was like, what the hell is going on? What is such a euphoric enthusiasm on the upside? Well, now we know what the purpose was. The purpose was to bring in as many long as possible to the upside, only to pull their pants down and rape them. That's pretty much what happened here. Now we are in the process of doing the exact opposite that we saw on the upside, now to the downside, where we are at the point of everyday crush, 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 crush. And I do not believe it's for wrong reason. I always said that when we were going up there, that there was absolutely no reason nor logic to chase crude. You have more crude than you have drinkable water out there probably. You have hundreds upon hundreds of tankers sitting at sea not knowing where to go dump the oil. And every single economy in the world is slowing down. And therefore it was the most absurd, ridiculous campaign of forced short covering in this process up, and now we are giving it all back. We broke out of a very distinct triangle very successfully to the downside, and therefore if everything shows well, 52 is the first target down. Of course, we have to now consider 55 as one level of significant support. Once we clear that 55, there is really nothing below 52. And I agree that it should drop. I do not believe that it was anywhere justified to be close to $65 a barrel. Now it's doing what it's supposed to do, and the time will come that you will see exactly the same pattern with the stock market. Every morning you're going to wake up, it's going to be 500 points down. Every morning 300 points down. And now this is in a corrective mode. 55 is your first level of support. Watch that. We could see a bounce, because at 55 we will then have a correction of almost 10 points from the recent highs that we have seen at 64. But once we clear that, and if they can see that there is no demand coming in at 55, they're going to break this, they're going to crush its back, and they're going to take it down to $52. In terms of resistance right now, 56.80 to 57 is the first level of resistance. We clear that. We have a POC at 57.40, and then after that 58 even up there. and on the downside 55 is our first level of support. Now for gold, many days ago I sent a daily chart which was exactly this chart, which is still on my Twitter archive that you can go check, and I said that we were a long-term buyer of gold between 1160 to 1145. We did dive below 1160 for a very short period of time, and then immediately the buyer came in and pushed it to 1170. Now the same buy zone remains. Anything below 1160 to me, it is absolutely a dirt cheap bargain for gold. On the upside, obviously this thing is wide open. 1174 first target, 1180 second target, and then we have a POC up there right around 1200. I still believe among all the assets, this is one of the most fairly valued asset that has not been abused whatsoever to the upside. If anything, it has been viciously manipulated to be kept down so that this wouldn't compete against the US dollar. But I believe it is getting very close to the time where the whole house of cards of debt spending, irresponsible Fed gambling, politician mismanagement of everything, all of that is about to hit the fan. And once it does hit the fan, they can do whatever they want, sell as many as they want on paper. I think gold will only have one way, and that will be up. So I'm still a very strong buyer of 1160 to 1145, looking when the time comes for this thing to start its uptrend. Blue through 1200, first upside objective, big term or longer term about 1400 an ounce. Thank you for listening. This was Reza with Profiletraders. If you wish to join us, you can do so. You can get all my courses and 1-year membership to my trading room for $550, money back guaranteed, from our website profiletraders.com. Have a wonderful weekend and a very happy 4th of July.